Okay, chat. Welcome to the backtesting series. So obviously, you guys know who I am. Well, it doesn't matter who I am, anyways. But this is the backtesting series, and a main reason why I'm starting this is because I am not interested in writing anymore, bro. Like it takes so much out of me, right? And ever since I started picking up on religious studies, I'd much rather save my ink and my journal for God's work rather than this. But mainly the reason why I switched from writing to recording is that it's much better to watch a recording, and you can also see, right? When you write notes, you there's no visual representation of your notes, right? It's just notes. So watching it is a perfect way. I don't know if some people prefer writing. Yeah, writing is great, but I much prefer watching. And when it comes to relieving myself or like thought process, I much prefer taking a walk. Right. So one thing I observed is I trade session liquidity. Obviously, right. That is you will as you'll see, but I changed something. Not I changed something, but I noticed a slight change in something. Is that I don't really give the high time frame much importance. I much rather just hop into the hourly chart, mark highs and lows, mark go on the 15 minutes, check what session liquidity, and try to see for one of them to be swept. But there is still obviously hourly liquidity and 4 hour liquidity. Like in this trade, um, obviously this taken I presume outside of London sessions normal hours. Yeah, I believe no, it wasn't. It was taken within the London session hours. So London session 3:30 took out that high. I now move straight into the 3 minute. I do not wait for um, the 5 minute because the 3 minute and the 5 minute are so close to each other. Then there was this fair value gap, right? That was filled, well, not really filled, but tapped. And then obviously there's an entry point on the 3 minute. You can aim, this high over here, and then marked out standard deviation. With the standard deviation, if you mark out the right leg, high to low, the -2 is an aimable point. With the -2, I aimed for this fair value gap. I'm sure if I add the 2.5, you will see that it will overlap there. Right? Do I have 2.5 here? I don't have it. Let me just add it. -2.5. Whoops. Let me just do that. -2.5. And then let's see. So normally in the -2 to 2.5, you want to get the PD array that can tag you out. The closest PD array for me was this fair value gap over here. And yeah, you could have targeted that fair value gap. You could have targeted the 50%. But this trade is what got me this realized profit of 329,000 rand account, by the way. So we're back testing, and obviously I will walk you through what I think. And yeah, winners or losers, we're not really here to show off win rate or whatnot. I'm really here just to make visual memories for myself, and I just hope that this information does benefit someone in the long run. And yeah, that's pretty much it. So as you can see, it's now 8:59. That means we're about to hit the New York kill zone. I think it's kill zone. I don't know, but yeah, pretty much the kill zone. We do have this mass consolidation, and then we have this move up. So I'm willing to bet that obviously that's Asian. I mean that's London, right? London range, and London's high just got taken at 9 o'clock. I would want to watch the 15 minute, see what kind of price action is printing. Right, it's 29 from 29. Like I said, there was a consolidation here, but I do want to see what happens here. We move on to the 5 minute because I don't know why the 15 minute jolts so quickly. Let's see, let's get to 40, right? 44, and let's see what gets printed there. We've got rejection candles. Well, these rejection candles at 45 already is a problem. Let's see what 50 brings up. So because we already took out these highs, I would want to see some price action leading downwards, especially since the 15 minute has shown rejection. And and we can see on the 3 minutes there is a like evident price action. The price is moving downwards. Here we go. If we mark range high to range low, we haven't even reached the -2 deviation. A good take profit point is this low, which already took out London low, which is quite surprising. In terms of price action, we're not looking good. It's almost 10.50. There we go. So it seems 10.53. We don't close above. Even if we do, it'd be quite surprising. Okay, now we have this sharp move down. The problem is, since we took out liquidity here, normally it would be best to scale down one more time and then get a setup from here. But then again, I don't want to be pushing myself too hard here. I'm pretty sure some good price action is going to show itself. You see what I mean? Right, scaling down too early or scaling down below the 3 minute, in my opinion, is quite tricky, and you want to rely on this higher time frame power in a sense in order to like determine like something good. Let's watch what the 5 minute has to offer. The 5 minute also takes this high, but it's already 10.10, so it's some really sketchy price action here, man. Right, possible SMT. Let's see if we can. I think we could do shorts from here. I wouldn't lie. It's a very good point. This low has been broken, and this fair value gap has been disrespected. I'll put it on these highs, and if I had -2 deviation, and let's just see, man. Okay, we get tagged in. Oh, and tagged out. Right, so this setup is good in my opinion. There's nothing out of the ordinary, right? Rejection candles, inversion candle. As you can see, even the 5 minute was very well inversed. Right, this is just one of those trades that are like, I was listening to what's his name, one of the guys in the trading space, and he mentioned that you can have an A+ setup, and an A+ setup can also fail, right? So it's just what comes with a working model, right? A working model doesn't guarantee a win every single day. It just guarantees that you will have a good edge, right? So this was good. This is as good as it gets, right? If you wanted 1-to-1 R, that's good. You could remove SL to break even, and then after that it just breaks you even, right? So pretty much what you get. London session you got something, New York session you didn't get something. That's good. Maybe also following overall bias, but overall bias was bearish because of this fair value gap over here. So we were kind of working in bearish price action. And then once more, let's hop into. So we've got our Asia highs and lows, but like I said, 4 hour takes precedence. We look at current price action. Did this 4 hour level take out anything? It did actually. Took out this low over here. So in other senses, this is actually a manipulation, and if we had to play out the standard deviation, our -2 deviation is all the way here, and long term, because this is February price action, long term this would be our objective, right? But obviously we don't care about what's going on that far. We've got this break of structure or market structure shift, whichever one you prefer to call it. We've got this break of structure here, right? Normally this move down is another manipulation leg, right? So you could extend this out, range low to range high, extend it out and see where you lie on the deviation. The standard deviation is right about somewhere here. So if you're marking -2 deviation, you would have here, if -2 to -5 and -2.5, you would have a high that resides here. So high time frame, we are bullish for the long run. untapped fair value gap, break of structure, residing high. Well, let's see what London session brings, obviously. So we got London session. We've got a set of, is it equalized? No, these sides are taken by these eyes, but well, then this is a candidate. And this high was taken, and then obviously this candle was placed at 3 o'clock. So I still consider it to be liquidity from the previous session. So now it starts working its way down. Now obviously while it's working its way down, we still need to be wary of the hourly candle, right? So this hourly low is swept. We do know that we are bullish, so it would be natural to have hourly price action, sell price action prior to buy price action, because obviously before it can buy, it needs to sell first, create some equilibrium price in the market. Then we've obviously got a violation of bearish order flow right here, but we only engage during the macro times. So after this engage, this low is intact. Maybe you want to see a break above this high. Okay, still nothing, and now we're outside of London session. So now this London low gets taken. Alright, let's see what it looks like on the 15 minutes. This low gets taken, this place is above. Well, we missed that whole run. Alright, after that low gets taken, price leaves us with a fair value gap, but this fair value gap wouldn't really be valid because of the fact that we didn't have a close above yet. But now we have a close above here. This would be an optimal position to buy from. Alright, and we also have to mark out the standard deviation. I think from my point of view, marking out any standard deviation outside like sub 3 minutes is like ludicrous, bro. It's much better to mark your standard deviation on the execution time frame, so that way you're not overextending yourself or over aiming, in my opinion, and then taken out. Right, it's another one of those setups where all your conditions are met, but you're just unlucky. Right, on the hourly, maybe the failure to recognize this bearish close. Alright, bearish close and then a revisit of that breaker. Just that failure to recognize that changes the game drastically. Like, it drastically changes the game. So maybe just paying attention to that would have been crucial. Right, so it's very important that you do pay attention to it, but it's also important that you stay out of a, right, so you can see that we're out of the session, and trying to catch a trade outside the session is quite weird. So now we have proper reference for future, and as you can see, we're currently making our way, we've made our way into this bullish fair value gap. There's a breaker here. I'm not so interested in it. I only use breakers for entries. So let's see what's gonna happen for New York. Okay, 859. As you can see, price didn't close below that, so the bullishness is still being maintained, although this low on the lower time frame wasn't taken yet. Let's see what 930 is gonna print. 930 prints bearish. Fighting to preserve. Well, it did enter here. This hourly fair value gap. Let me remove this 4 hour. So we got the hourly fair value gap. This low is taken. Now it would be, right, trying to work its way up. In my opinion, it should be trying to work its way up. So we have price action working its way up, and because now the higher time frame is bullish, right? We did work out of bullish levels. -2 to 2.5 is in the middle of nowhere, so it is quite dangerous to aim that far, in my opinion. So as for bullishness, I would run it to the nearest liquidity, either to these highs, which kind of look like equal highs. Let's see. Nope, one swept the other. Okay, let's much rather just try to take out the session liquidity. And this is just another one of those setups. Another one of those setups where all your conditions are met, but price just does its thing, right? It's in the breaker. We are in a bullish momentum. There was no prior, take of liquidity on the hourly time frame. We have another break, right? I do understand that we've had this break below, right? So we did kind of have this the fact that we had this break below, we should have considered a deviation of this, right? -2 deviation, but it's already at TP, right? -2 deviation right there, so it already took TP. I don't understand why it plans on going further, right? It just insists on going further, right? Normally to this, there is a maximum deviation expansion of -4. Does it reach it? Let's see. Yeah, it intends on reaching it, and it does in fact reach it. There are cases where some price action will reach maximum expansion, but usually around the -2 to 2.5 is where you'll see a reaction. It's not always safe to aim for maximum expansion, so you kind of want to be on the lookout for that. Maximum expansion is this 4-hour. Let me remove all the drawings. This 4-hour gap here, but it's also this low right here. That's maximum expansion. I don't understand why it would really want to expand that much. Range low to range high, no, right? But generally, you don't want to be trying to justify every loss. If you keep doing that, you're gonna have a ship shifting model, because the next loss that you're gonna try to justify will be a very different scenario that doesn't suit your model. Just have a model and make sure you pick out what you're lacking from it. Like I said, mine is just failing to refer back to the higher time frame, right? The 4-hour didn't close below, but the hourly closed below, so just mize it, because obviously the 4-hour holds more power than the hourly. And obviously sometimes these candles are not fully birthed, right? Like you can tell the distance from where the price is now and from the 4-hour. Oh no, they're pretty much the same. Ignore what I said. Okay, we've got that. And then the hourly candle's the London session is about to birth. So we've got range low of Asia, range high of Asia. So we do know already that we are bullish because the 4-hour didn't close below. We've got this, I don't know, order block, breaker block, whatever you guys like to call it. So I would be looking for higher price action here on out. Whoop, that's a huge drop, right? So 315, 330 indecision, 345. This breaks down, so there's a break of structure here, right? There is this sweep, quote unquote, right, that happens here. We're not going to be oblivious or ignorant, for that matter. We're not going to be ignorant to what is in front of us. So it would be more rational to be favoring. See, -2 to 2.5 is looking at those Asia lows. It'd be more rational to favor the lows, the sells, rather than the longs. Very good price action here, right? A break below, retest. I usually would account for this fair value gap, but the fact that prices moved on so quickly from it is quite alarming. There is also this low that might come back to retest. So in all, for all safety measures, we're going to be aiming here. Since this low closed far, this down candle closed far, this is a breakaway gap. And then we're going to be aiming, I don't even know if we're greedy because we've got good RR, so I'm sure we could actually sacrifice the RR for the sake of respecting price action, even to the point of just bringing the entry point back down here. But for price action's sake, let's see how this does. I know I could just play it out like if I disconnect this and play it over 5-minute sequences. As you can see, price dances quite a lot. Does it eventually get to TP though? That I hope. Ooh, that's very, very. That would be very frustrating, I can't lie. After all those dances, boom, comes to TP. But as you can see, it really nears towards the SL over there. So my fair share of advice to you guys is to, like I said, sacrifice the RR and put it at a respectable level. Right, this is still a fair value gap. It can still, a breakaway gap can still be visited, right? But as you can see, the opening of the breakaway gap was still respected. That's why I usually have it at the opening. But I have had my fair share of experience. Even if you put it here, I've had my fair share of terrible experiences where price just comes and takes it out and then leaves. Right, so generally you want it at the high. Other than that, this is one of the best trades we took so far. Like it's long, it's lengthy, but it's got a good range to it. But then again, my mental tolerance cannot hold up this long. Lord, like this is from 4 o'clock to 4 o'clock, a whole 12 hours of holding for what, 3 RR. If you're making a good amount of money from it, then by all means, right? I think these are a set of equal highs, even though this one looks like it took this one out by a margin. Then again, it came back for the 15-minute time frame or the block right there. So that's for your traders who did something like this, which is kind of the same order at the end of the day. So you see, still taking consideration of the higher time frame is very important. And I think the key here was not mising this sweep. I believe we were bullish on the day when we were considering this order block, but not mising this sweep that happened. Even though, one thing I think I failed to do was throughout my trading life, I've always told myself that these sweeps can only happen from 3:30, but the truth is these sweeps can happen earlier or later. Right? In this case, it happened earlier. There was a take at 3 o'clock already. Took it out. So 3 o'clock, I think, is a shade candle. Let me put it like that. It's a shade candle. There's also this high over here that was taken alongside there, interacting with that fair value gap as well. This sweep, this market structure shift, giving us a deviation leg, giving us a fair value gap. So there was the signs were there. The signs were there, giving us a fair value gap, and then a deviation of -2.5. If price was greedy enough, it would extend to -4. But okay, there we go. It extends to over to the -4. So like I said, price may extend to the -4, but I really would not be that ambitious. This is also one of the reasons why I'm leaving pyramiding. Alright, pyramiding works well if you're gonna aim for the -1 deviation. As you can see there, it's super tight. You'd probably get there's probably a low that's there on the 3 minutes or something that was easy to grab. Okay, there was a fair value gap right there. So that's the problem with pyramiding, is that let's say for example I'm on the 3 minutes, and where did I enter? I entered off this fair value gap, I believe. Right, so here, right, this low comes, comes in, it retests. I can add a position there, and then obviously I can cash out at the -1. But if I was aiming for the full -2 range, then I would regret, because what happens is you pyramid, you get here, price comes all the way back to entry. The position that you pyramided here will get taken out here, because normally you're trailing your stop loss. And then what happens, it vomits the whole range. And then what it does, like in this case, it vomited nearly the whole range. It ranged a bit, went right back up, right? Went right back up, and then vomited the whole range to the -4. So it's much more intelligent, in my opinion, to maintain one position, or from that 1% just risk a large amount, right? You don't want to be pyramiding, especially if you're aiming for, especially like, because this was a 15-minute deviation leg. I believe if the deviation leg was much thinner, for example, like you went on the 5 minutes and then you measured it from this range low to high, you would have had a -2 deviation. You see there, your -2 basically became your -1. The only downside is that the RR would have been much thinner, right? If we're working from this 5 minute fair value gap, right here to here, and then your -2 deviation, you have a 1:1 R. But if you take the actual sweep that took place on the 15 minute, then you have some good RR to work with. Can't lie. So it's all subjective. It's all really subjective. I can't lie. From 350, you've already got the setup. You know, the only difference is just knowing when the sweep takes place. So the sweep took place here, 3 o'clock, swept. You've got that shift right there. If you've got that shift, then you obviously got your -2 deviation leg from what took out liquidity. From that shift, you could be waiting for 350. 350 is here, like just around this area. You've got another shift. You've got a fair value gap right there. You could have had your fair value gap entry, and then obviously, right? I think that's a high. I don't know about the other one. Right now, this makes sense. You see. So now we go for the -2 deviation. Obviously, -2 deviation is like either the fair value gap on this inversion, but I'd much rather prefer the inversion, because the inversion is much closer than that tiny fair value gap over there. So on -2, you can say -2 to 2.5. It's all subjective, really. If you say 2.5, then you might be a bit greedy and aim for this low. But then again, it all just produces pretty much the same result. At this rate, you have a 1:9 R, very beautiful. Then again, it's all subjective, really. If you were waiting for the 15-minute to react, then obviously you would catch your entry somewhere here. Wait, if you saw the sweep already and you waited for the 3-minute to react, then I don't know, bro. God bless you. But it all just brings different results. All depends on how you trade or how you tend to perceive. I like to see a 15-minute sweep, right? I like to see a 15 minutes generally close below. If it does displace out, I'd like to see it displace back in. But generally, I like to see wicked movements. So the wick is, the body is respecting the liquidity. I like to see that. If I see that, then I know that it's doing well. You know what I mean? So move drawings. Let's see how many more we got. Okay. We move out of this breaker. Not breaker, but volume imbalance. Alright, we've got this volume imbalance. We've got this high here on the 4 hour. Now we want to move over 2 candles. Right, this is, now we've got low resistance liquidity here on the hourly range. We are bullish, especially since we took out that 4 hour level. We've got that. And then obviously we've got this low here. But I really wouldn't expect price to be engineering itself that way. This level has already been tapped here. I don't really want to see it tapped the second time. But then again, a sweep could also occur. I can't lie. Now we've got a 15-minute market structure shift. Well, we've interacted with this gap already. Market structure shift. Now I want to see what it's gonna print. Oh, we got 50. Price is now takes out low, takes out high. As you can see, we take out low, we take out high. It's really a question of where do we plan on going. Okay, it closes below. Right, we do see it below close. We see that retest right there. Well, almost. That's barely retest. This is the time where you really want to zoom out, see what happened. So this candle wants to close in this gap and successfully close in this low, then it will successfully retest, because this will become a 15-minute level. And then obviously, if that's the case, then I don't know. Like I said, sometimes you will have price displays outside the range and back in. So really confusing. That's why you want to wait for 950. I mean 350. 350 for London session, 950 for New York session. Right, so if that's the case, see, now it comes for the actual retest. Right, so boom. Obviously, now that there's been displacement, you want to see where the -2 deviation is. -2 to 2.5. Is there a reliable level there? -2 to 2.5. I don't see anything reliable, so I'm gonna most likely just aim here. -2 to 2.5. Is there something nice? Yes, there is something nice. There's this low here on the 5 minutes. Really, on the 5 minutes, is that a fair value gap? No, it's not a fair value gap. It's only this breaker here that is really supporting everybody. So let's see. Whoa, it's a fat candle, and we're out. Right, so that bullish idea still held true. I mean, the bullish idea still held true. Possibly this is what we should have looked out for. You know, it's still not 450 yet. Alright, 444, 447. Now it's 450. Right, so I don't know. Maybe waiting for that. But the thing is, I can never be too sure, because there are some trades where the conditions are met, right, and it goes to TP, but it's outside of 450, right, or 350, or any macro time for that matter. So, well, since I'm doing a video, it'll be good because I can actually document the evidence, right? This trade is irregular, right? It's another one of those trades where like conditions were met, but it's a failing trade, right? So we into that fair value gap, market structure shift, you extend out your deviation, and you get wrecked. You get wrecked in the process, you know what I mean? So it's good. Next trade, and as you can see, the PNL is like very static. It either ranges between 400 and back, right? But I promise you, I'm not this terrible on live accounts. Live accounts actually do great. I should have taken a look at New York, but it slipped my mind. As you could see, the price still maintained the bullish price action. So after that, right, the bull movement is still there. I feel like submitting to a daily bias is important. Generally, when I developed this model, I developed it with the idea of not having to have a daily bias and to be very flexible with what price action offers. But the more I trade like live accounts, the more I understand that a daily bias is still crucial. Alright, we took out this high, and then we've got this up candle. Oh, it doesn't close above this, so I wouldn't consider bullish price action being the case here. Let's see. So this hourly candle closes below, got low resistance liquidity. Hourly candle closes below. Let's see what the 15-minute candle is interested in doing. It does have this market structure shift after successfully having raided these lows. Could we trust 15 minutes? But this PA is still happening, obviously in Asia. Let's try to extend it out in time. Negative 2.5. Okay, let's just imagine for a second that this PA is actually correct and that there's a possible SMT. This high gets taken. I mean, this high gets broken through, but it just keeps rising without giving anybody an entry. See what I mean? So 350. Still, it has like this sweep, and then it closes above. Right, and then it sweeps again, goes down. This is a moment where like you start questioning yourself. But generally, I would expect price to print down to this level. Okay, it closes below. Obviously this one as well, but that one is less credible. So it keeps printing lower price action. Let's see if we can. Let's see, we still have a decent amount of low resistance liquidity. No justification of this sort. Obviously, okay, there's this take here on this high. Alright, let's take on this high here. But then does the 3-minute justify it? Yes, we do get a 3-minute market structure shift. A break, fair value gap. High wasn't rated. Was it? No, it was around 430. So there wasn't really an entry for us, right? Besides getting here to this point. But then obviously if you extend out your standard deviation, okay, it still has ways to go, right? So we won't retake the session. Okay, negative 2.5. It does actually fill the condition. Let's see what 450 or 450. I would take this breaker, but it's really jiggly, I can't lie. I would really take this breaker with this high over here, right there. Well, compensate for the high and have it up there, just to consider this fair value gap that's over here. But then obviously if you're aiming for the negative 2 to 2.5, then you can compensate for the RR lost right there. It's a decent position. I'd most likely just be greedy and close the gap. Let's see what the 5-minute has to offer. Yeah, the 5-minute offers no gaps, but it does offer the same breaker. So I'd much rather, I think I'd have been greedy enough and taken it at the breaker here in the 5 minutes with my stops over here. So that's an interesting sell-off, I can't lie. With a negative 2 to 2.5. This is by far one of the best changes that I've ever made. Like submitting to the standard deviation projection of negative 2. Like, because of my past experiences and I'd say terrible markings, put it that way. I've been aiming only for the negative 1 because of the major stop outs, especially because I was a pyramider, a pyramid of Giza builder, I guess. Call it that if you want. So I would really avoid going further than negative 1. But yeah, after a good discovery of what price does out here, it's been very beneficial. I think this sell is justified by my statement I made prior when I was looking at the 4 hour, I believe. Was it the 4 hour? Yes, I said that there was this large wick candle, but this up close candle didn't close above this, so I wasn't looking at strong bullish movement. Like I do remember saying that. So yes, this sell was justified. Obviously it didn't take out the entire session, right? But because it took out a level, and gave us a market structure shift. It was only fair that we gave it a chance. Right after this market structure shift was given here, right? So the sell-off, yeah, the sell-off only took place like somewhere here. I mean, not the sell-off, but the macro. Well, I also have to say that it stands to reason because my previous, well, before I tweaked my model, it was that I would pay attention to these highs. Like you see highs that are made prior to, not prior to, but right now as it stands, I only trade the extremities, right? So the extreme high or the extreme low of the session being taken. But in this case, obviously, we had a high that was within the session that was taken, right? I used to do that before, but then after a moment, I converted back to only using the extremities. Excuse me, the extremities. And I'm reconsidering, right? These, oh, this RR is beautiful. I can't lie. Um, but yes, I really have to consider these. Obviously, 5 minute and 3 minute offer different ranges, but I really have to consider like changing up because the extremities. Uh, I can't though guarantee that it will always work. Let's see. Do we expand for the -4? No, we get taken out before even being able to expand. Uh, let's see what New York price action offers. Okay, let me get rid of these. Move drawings. So usually I only consider the extremities, but you must also remember, right? Referring to the higher time frame is important. We've got our fair share of trouble in this episode because of not referring to the higher time frame. So we have this break of structure, right? There is no sweep, so we've got low resistance liquidity resting here. We do have these breaks here. So now we have low resistance liquidity here. We have this high over here, and then we have obviously these series of highs. Let me just do that. Wait, let me press keep drawing. Place it there. Up. Place it there. Place it there, and turn off keep drawing. Right. So now on the 15 minute, have we got anything? Yes, we've got something. I think I should start doing this in live markets, right? Higher time frame, then lower time frame prior, seeing did we sweep anything for market structure shift to be valid. Yes, we swept something, so we've got something here, right? There was a low that was in Asia that was taken. Was there any market structure shift? A very minuscule one, right? Is this retracement doing the 50% of the range? To some extent, but it closed and invalidated this fair value gap. So I want to see like a push above this high, not a sweep, and we get that push, right? Exactly that. We get that push. Can we get the revisitation of this order block, breaker block, whichever one you want to call it? But as you can see, the price action is already offering some good intel. Okay, stands to reason that it's 950. We've closed above this, even though the close is quite weak. I don't generally trust weak closes, but we are also very close to the liquidity already. So this also means that we need to measure out this swing, which is quite large. I can't lie to you. we reach the -2 deviation. The -2 deviation is far above, right? And does it match with anything? It actually matches with this high over here, -2 to 2.5. The question is, will our price action sustain it? Right? It's always possible that it can sustain it, but it's also possible that it cannot reach that high without taking us out first. So, for the first time in forever, let's be greedy. And let's see. This could be a nice end to the episode. Could also give us a nice laugh. But let's see ultimately what price action intends on doing. And that's a takeout. Right? Exactly what I was saying. It comes back to that order block. Right? Let's see what price is gonna do after that order block. Right? It'd be very funny if it actually, but it would also signify that higher time frame is always more important. Right? And it's gonna go to TP. Very likely that it's gonna go to TP. Yep, it's on its way, and it's so sad to watch. So sad to watch. All right, let's see. Can you speed this up? You haven't got all day. Give us 30-minute movements. Comes back to near entry. Does it complete the range though in PM session? Oh, it comes. Alright. Ooh, okay. So one thing we realized is -2 deviation was fair, but -2.5 aiming for that higher time frame jaw was really a stretch. I feel like, okay, there were a lot more levels. There was this high as well, which was tapped by the letter. And then obviously there were things going on. Oh no, that's in the 3 minutes. Let's see if the 15-minute has something clearer. Yeah. This high, the closest high. We've got a fair value gap also here. Right? When you're generally aiming right in this zone, right, the -2 to 2.5, you really want something that's close so that you don't experience this, right? Because being this precise, as you can see, doesn't always pay off. So the key thing here is obviously -2 level was hit quite perfectly. If there was a level there, it would be great. Another thing is obviously the RR. Like I said, the 15-minute takes precedence over the 3 minutes. So if there is a level still lurking there on the 15 minutes, there's a good chance you're going to get taken out because that level needs more attention than your position. So yeah, that's very important. Right, maybe trailing it right there, and then yeah, reducing this for the -2 deviation, or aiming for that high right there, which was not taken at the end of the day. As you can see, it was slightly missed. But that ends off the episode quite well. Right, let's see what win rate we end up with. A 28% win rate, which is totally fine. Why do I say totally fine? Because of what we learned in the process. This episode was about how long? 48 minutes long. It was a great episode. I personally learned a lot. And like I said, these episodes are just mainly to allow me to visualize my backtesting sessions, not just jot down notes and not be able to know what happened on that specific day. So I'm really glad it turned out the way it turned out, and I will see you guys in the next episode. Peace out. That's the next episode is tomorrow, by the way. Right? I backtest every day after hours. I don't want to be disturbing family, and I don't really also want calls and disturbances while I'm backtesting. So if you'll excuse me, I've got a wife to attend to, and I bid you all farewell and good night.